I want to take that opportunity and give you a little bit of a longer outlook for both the S&P, the NASDAQ, and also the US index. The US index starting off, it's been moving exactly as we expected, okay? We looked at this as wave 1, 2, 3, 4, and 5, and this is still being the case. What I'm not sure is whether we've had intermediate wave 1 ending over here, or we're going to see it ending right there. Now, taking into consideration that we're still looking biased to the downside, okay, then it's a very good, I mean, the probabilities of this being wave 1 down here are quite good, okay, which means that in that case, we're wave 1, wave 2, wave 3, wave 4, and wave 5, okay, and that suggests that this is an open triangle pattern, okay, and we've got ABC, 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 ABC with wave 4 ending over here, okay. If that's the case, then we ended around the 38.2 Fibonacci retracement. This is the 50, this is 16.8, right? That means that this move to the downside is quite bearish, okay? Now, the question is that what will happen when we break below that level, and if we break below that level, because it could be a case where we have a very, very weak attempt to break that, although it doesn't seem weak at all for me. And then we move to the upside, where we take either wave 2 or wave 4, could be the case, and then move to the downside. Okay, so we really need to look at this with a different, we really need to look at the US economy. Okay, we need to look at the fundamentals, because the US economy is improving. We'll have the FOMC minutes on Friday, then we'll have the NFP the week after, and I'm expecting really the employment situation and unemployment situation to keep improving in the US. So we could see prices up to the 10th of January or so moving up here, down here, then have a correction to the upside, and then of course look for further close up here in the longer term. But in the short and medium term, I'm a little bit bearish, to be honest, and this is what my charts are showing as well. Now the S&P, we talked about the 3250, okay, we've had ABC, 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 we talked about the 100 Fibonacci, the 61 Fibonacci extension of waves 1 and 2, then the 60 Fibonacci extension of waves 1 and 3 over here, 61, okay, they both brought us to 3250. Now, the question is, did we end minor 5 over here? Where if we haven't, it means that we don't have these corrective patterns being validated between one another, okay? And that also means that we're going to see prices moving up impulsively. Now, it could be the case where we could see a false break, and that false break could take us up to 3350 or so, but that would be the highest level we could see that will be validating still this corrective move to the upside, right? Otherwise, we're really looking prices to start moving lower. Now, if we take into consideration that momentum is drying out really, okay, we could see prices start moving lower, okay? And if we also look a little bit closer, be able to identify a very nice signal to the downside, okay? A hidden bearish divergence, okay? Now, the potential for the upside is not as bad, because we can still, if we look at this level over here, oops, excuse me, there we go, then there is still potential to the upside, but very little, okay? So we could go anywhere between 3250 and 3350, I would say, and still be valid still keep this as a valid correction, okay? Which means we can expect another correction to the downside as an ABC to take to form wave 4 of this move. Now, what I want to do quickly is compare this with the NASDAQ, okay? And why? Because NASDAQ is quite impulsive, okay? And momentum is not really drying out. It's very positive. We can see this move right over here. We can see this. This is a clear continuation pattern, okay? Prices are moving higher. Prices are moving, momentum is moving higher as well. Now, the thing is, as I said before, I see this as more impulsive to the S&P, right? I see this as wave 1, 2, 3, 4, and 5 in the longer term, with 1, 2 over here, giving us a target of 88.95 for the 100 Fibonacci extension. Okay, and this one over here, the 90.70 as a 161 extension, right? So anywhere between here, we can expect prices to move a little bit lower. But I'll be honest, I'm not expecting this to move below the 8,000 or so, maybe for the fourth break in the medium and longer term. Because, as I said, I see this quite impulsive, and I believe that prices are potentially going to go. Let me just take this 1 second. Let me just, there we go. Well, okay, this is another projection, okay, on prices. If this continues being impulsive, okay, because we might as well just see that becoming a correction, A, B, C over here. But that would, of course, invalidate this whole projection and information that we've been following for a while now. I'll be looking closely at what's happening with trade war, Brexit, as well as the Fed's guidance.